Hello and good morning, everyone. Welcome to this live intraday strategy webinar. Today is Wednesday, December 21st, and our final intraday webinar of the year. Good to be with you guys here in the room. Conwal, Eileen, Pooja, Ziad, Graham. Great to be with you guys this morning. So we're going to go over some of the broader setups that we've been following. Again, I want to stress you guys, if you're looking for intraday positions, not really our favored market right now. There's still opportunities across the board, and we'll go over some of those setups today. But just heading into the end of the year, good idea to kind of take a little bit more of a defensive stance. The dollar crosses are still sort of what's in focus. The yen crosses are of real interest. But what I want to do today is leave the floor open for as many questions as you guys have heading into the end of the year, the start of 2017. Certainly we can go over some larger theme pictures as well. I do have very interesting charts I want to discuss on pound yen, dollar yen, Aussie yen, gold, all coming into larger picture support and resistance areas. Euro yen, dollar cad, sterling dollar, and euro pound from yesterday. Kiwi Cad, Aussie dollar, and Aussie yen from the previous day. Some interesting price action on Nikkei 225, and obviously gold and crude. Is Conwal in the house? Yes, Conwal is in the house. So we got the commodities for you there as well. Okay, as always, questions, trade setups you want to review, feel free to stop me at any time. Conwal says good morning to you as well. Eileen, happy midweek of risky price action. Same to you, Eileen. Conwal says, check your level range of nat gas. Your analysis is always working well. Cheers, Conwal. I'm not going to lie to you. I haven't looked at a chart in nat gas in months, but I'll be more than happy to bring one up for you if we have time here. When you get a chance, can you talk a little more of what would make you try a position during times like these? It's all going to come back to the same stuff. Eileen, we'll take a look at some stuff today. I actually did get stopped out of an Aussie position last night. Really, really nimble. Again, all my leverage trades, guys, are literally, a quarter to a fifth of what they typically would be on a normal basis. Not the thin markets that you want to really try pressing heavy on intraday positioning. But it's all going to still do with the same stuff, Eileen, that we look at on a day-to-day basis. How close we are to critical support or resistance ranges, when we are in the day, and the cleanliness of the signal. Again, I just want to really, light is the name of the game in these markets. Light is the name of the game. But there are still opportunities. So let's jump in. Here's what we look like right now as we head into the U.S. session. You see the dollar is actually weaker against all its major counterparts. Biggest gainer is the yen, up 0.54%, which we've been looking for this yen strength to start to materialize. It's been a while. All the yen crosses are essentially looking at the same story. Aussie yen came off of a huge region of resistance. We'll talk about that. Euro yen came off of a massive region of resistance. We'll talk about that. Dollar yen, I don't really, let me take a step back. I still think dollar yen could mess with us a little more, make another push, but the broader picture still looks the same, and we're looking for this pullback in the yen crosses. So we'll go over those as well. Euro up 0.39%, so is the Swissy, Aussie, and Kiwi, both up 0.1%. Pound with a pretty much lackluster day, same thing on the loonie. As far as the pound is concerned, okay, we'll take a look at that chart as well. I do think you could get a little bit more of a rebound. That sterling divergence has been building into the lows. So I do think it could pop higher, but eventually still looking short on the pound. And that's what's on the docket for today. So let's jump right in. Here's what quick look at what the dollar index looks like. Really quick, before we do that, heading into the U.S. session, I do want to bring your attention that we do have existing home sales at 10, but more importantly, guys, the crude inventories, that comes out at 10:30. So watch oil prices. We'll go over oil prices, obviously, and dollar CAD heading into the 10:30 hour in New York. Okay. Here's what Aussie yen looked like yesterday. Or Euro yen, excuse me, looked like yesterday. So we highlighted this late last week. We were talking about 123.47 being a huge zone of resistance. That's the 618 retracement of the entire 2016 range. It's also the median line extending off that low from July and the 50 line of the broader structure off the high. They all converged right here. Heading into that region, you had some ongoing divergence. Price action pressing a fresh high, higher high, as the oscillator made a series of lower highs. So we were looking for that turn. Here's Euro yen now. And here's that critical area of resistance. So we were looking for this turn to materialize to give us some downside play. As we noted last week, we'll look for that RSI dip below 70 in momentum. We got that last week, and obviously the pullback is in play here. I'm still looking for another stab lower. We've taken out initial scalp targets, but we're still looking for a move at least into 120.96, 121. With, I think, if you get a drop into the 50 line, or more specifically 119, would be an excellent buy opportunity for a longer term position. Remember, that's going to be the 38.2 of the advance, but you also have the median line off the highs. Very nice clean median line right there as well. Former swing lows in the opening range low for the month. And it's back to pretty close by 118.46. This is a longer term picture, right? The daily chart, but the risk is there, right? Ongoing divergence, made a nice trigger break. Risk is still there. Here's what it looks like on the intraday chart. And here's what the intraday chart looked like last night. So this Pitchfork, I didn't want to include this in the report, guys, just because I don't have too much conviction on it yet. We haven't seen price action react to it yet, and I don't want you guys following it just yet. But I thought I'd bring it up here in the webinar. So if you take a Pitchfork off these reference points, it continues to highlight that near-term target at 120.15, and that'll be the median line right off the highs, and just a pivot in price. So sort of a decent target here on the downside break if the weekly opening range finally clears to the downside. So you're looking at 121.66 resistance and near-term bearish invalidation. We're going to choke up to 123.17. That's the weekly open. That's the weekly opening range high, or just above, and the 618 retracement of this near-term decline. All right, so essentially as long as we stay below here, the risk is for Euro Yen to see one more low in place. Again, initial targets, if we do see the weekly range break, is down here at 121. The monthly open comes in at 121.16, and then down at 120.15 and 119.02. So again, you can add that slope there on the targets. The targets remain unchanged. You can add that slope there, but don't get too aggressive on it. I will be looking for a rally here to see if we get some exhaustion, some short triggers. This would be a good one, Eileen. Why? Because the rally through this would necessitate a break of yesterday's high and or the overnight high basic and this slope. So you have a very clear bearish invalidation level. We choked down to 123.17. A larger range trade, so again, even more so, you got to be lighter on your leverage on this one, but certainly the risk does remain for Euro Yen. Questions on Euro Yen? And again, on its face, here's the weekly open. You've just made a weekly opening range. So obviously, as we get later in the week, participation is going to become a big problem, guys, because it's just going to be sapped. I guarantee you in New York on Friday, there's not going to be much traffic. So in any event, you just want to make sure that we're keeping that in mind as we get through these positions, trying to get a hold here below 123.18. Okay, see it, says Eileen. Would triggers there then mean getting beyond that upper median line? Triggers there then mean getting beyond that upper median line. I'm not sure what you mean, Eileen. You mean resistance triggers? If we see a resistance trigger give out? So there's nothing here on the 120 minute. Let me see this to the near term. Oh, she's asking, would you wait till the 618? Okay, so if we head into the U.S. session, this thing rallies towards the high, I'd be willing to take a stab against this if we get a decent trigger up here, Eileen. Because you're taking it against the session highs, you're taking it against former session lows, you got a nice pivot in price here, and the 50 actually comes in right there, actually. You see that? Just beyond. So if you get a rally into this region, stop against the 50, try to play that to the downside for a play there. Quarter of the daily ATR on Euro Yen right now is yielding somewhere in the range of 35 pips. That would be a decent position I'd be looking to take, sure. If it stabs right through and I do nothing, Eileen, this would be the last area I'd start to look to try to fade this thing. It all determined, remember, when we're playing the turns, guys, right? We want to see the market rally, pull back, and on the secondary approach, that's where your entry is against that stop. So if it spikes into this high and this doesn't hold, this is the last effort or last region I'd look for sort of a spike high and exhaustion, pull back, and then on the rebound, we try to get in to play the short side. As it stands right now into the U.S. Open, yeah, I'd be looking for initial resistance near those highs that we made last night, below 122.88. Yes. I wouldn't need to see RSI divergence, Eileen, but it certainly would be a helpful factor, right? Looking at the 5-minute chart, you're seeing that the momentum signatures continue to hold below this 60 level basically throughout the course of Asia trade since the high that was made early in Sydney. 60 hold, 60 hold, 40 break, 60 hold, 40 break. So we haven't seen a turn in momentum just yet. If you do see this break to the upside, I would expect to see that rally surpass, get into this sort of critical zone here, and we'll be looking for exhaustion there near term. And remember, aside from anything I say, objectively, that's just your weekly opening range highs. So if this gives out, objectively, right, I got to take a little bit more of a stance to the backside as far as trying to fade the rally. Does that make sense? Downside targets unchanged. Again, your weekly low, the monthly open, 120.96. 120.15 being the bigger key region of resistance, or support rather. Makes sense. And sterling getting in a similar area, I think, close now. So we will go over pound. Any final questions on euro yen? Going once, going twice. I guess we could segue real quick. I do want to come back to dollar CAD, but we could segue real quick to pound, Eileen, no problem. So here's what pound dollar looked like last night. Here's what pound dollar looks like right now. Take this a little bit back. Let me just start off on the daily chart. So obviously the break that we saw here last week on the 15th changed things for us. We talked about the monthly open converging on basic channel support and that really being our near-term bullish invalidation level. Once we broke below that, the short bias has been in play. Now, heading into last night, I did kind of give you a warning because I thought that it looks like near-term momentum is shifting a little bit. I still think you make another low in the pound. But the near-term picture does look like you could see a little bit more of a pop higher before it turns lower. So the daily chart, really nothing to point out of major interest here aside from, you basically need to watch and respect resistance at 125, which is the monthly open, and also the monthly opening range low. Here's what the intraday chart looks like. Here's the gutsy part. Here's the 4-hour. So, here's where we were last night. And again, if a lot of these setups, guys, are going to see a lot more chop, back, sideways action, don't be surprised, okay? It's just the time of year and the conditions that we're trading in. So Eileen, I agree with your comment here. It says looking for a short entry, maybe trying to come up. I agree. My ideal entry, and I was talked about last night, highlighted 124.30, 124.33. I'm not gonna lie to you, I was actually in a long on this as well. Real tight stop against the opening range low. There was a nice tight position which got stopped out on this last dip, but I still do think you can get into 124.33. So in any event, that's sort of the near-term resistance, bearish invalidation. Like I said, still got to be up at 125, 125.13. Monthly open, weekly opening range high, 38.2 retracement. You got that 50 line. They're all stacked up right here. So this is going to be broader bearish invalidation level. Near-term resistance, downside target still at 122.50. Just watch this whole zone and then down into 121.66. But if you look at this on the near term, right, still seeing that divergence there into those lows that materialized. This is a 30-minute chart. Here's the 1 hour. Didn't really get much divergence there. And this was the stronger one that I was looking at on the 2-hour divergence. Price action, a much steeper low here. Higher low in the oscillator. Add to that, one of the reference points are sub 30, and one of the reference points are above, right? When both of them are below, that's a weak signal. This tends to be a little bit stronger of a signal. So the risk is there, I think, for a little bit of an exhaustion reprieve rally, as it were, higher. But I am looking to short that rally as long as we stay below 24.33. Broader bearish invalidation, 25.13. And that's the pound. Questions? To be quite frank with you, you should probably get if this formation is going to hold, you should probably actually get resistance ahead of 24.33. Okay, look at the median line. It's actually been pretty decent. And this region just below, let me move this for you to put it in more perspective. If you zoom this out, okay, this is the broader formation that we've been working with. This is off the high on, what is that, July. Here's that median line. Here's the 50 line. Resistance, break, support, pivot, and that converges on this near-term slope, just lower. So like 24, heading into the 24 handle, is where I want to start to look for some support. If this is a little bit more of a near-term low, also another trick, I don't want to get too aggressive on this, but just as a reference point on some sort of near-term recovery for the retracement, just make this obnoxious color so we can just see it. Okay, a 236, just a basic 236, takes you right into 124.20. So my point being is, you know, these are levels of which you'd start to look for some near-term exhaustion here in the pound. Questions on sterling? What do you think of the 5-minute on sterling then? Let's take a look. 5-minute. Okay, so you're checking the Asia range highs. Nothing really too compelling for me here. I mean, if you're trading like real intraday, this would actually be, you'd be looking for some near-term exhaustion against these highs for a pullback. But, I mean, from where you are right now, it's working really tight. I still think you can stretch to see that high back near 24 before this thing turns over. That's like 23.90 right now, heading into the US Open. Ideally, I want to get a stop above 24.30. I don't know if you get that rally. We'll have to see. We'll have to see. Yeah, you're never really sure if it's going to get there, right, Eileen? But we have to wait to see what the U.S. Open does and see if we can get that final push higher. You know, the dollar weakness story here does favor a little bit more of a pop. Remember what the dollar index is doing, guys. We didn't take a look at the dollar index, but I do want to just cover this real quick. I'm going to segue. So euro yen was $1, sterling dollar was 2. Here's the DXY real quick. Just to put things in perspective, guys. Remember when 103.21? Well, we did get technically a close above it. 103.25 was the close yesterday. And I was watching this with great interest as you saw that spike just above higher, right? But that's the 1618 extension, the last ditch target from the lows off May. So, you know, I wouldn't be too surprised to see if we get some kickback here. And that's why I don't really want to fight the dollar weakness at this point. Keep in mind also the ongoing divergence. Here's another clear and concrete daily divergence with price action making a higher high, the oscillator making a lower high. Again, one reference point above 70, one reference point below 70. Decent signal. Add to that, you got a trigger here you can just keep an eye on in support. But that, begs a little bit more of a pullback, I think, in the dollar index. If we break and close above 103.21, guys, I was looking for targets. There's really, you could start to work with some basic various slopes here, but I think you're chasing, you're kind of just chasing levels that don't exist. You basically want to look for the 1989 high. I had to go way back. That goes into 106.56, and then nothing to like 109. It gets radical because you're in territory. Take this back to a monthly chart. You're in territory you haven't seen in quite some time. Okay, and this level right here that we broke again at 101.80, that major critical area that we were talking about for so long. You had a huge confluence of fib levels there, the high day close, the works. That was also, okay, the 618 retracement of the entire decline from the highs that we made in 2001. So this thing is coming through some big levels. Now on the monthly chart, I do also want to point out that you're heading into momentum resistance here at 70. 103.21, like I said, is a measured move off the low. You don't want to be the one calling the high, but you want to recognize where the trade is vulnerable. And I think at this point, I know we've been saying it for a while, but at the same respect, we haven't really been doing much for the last 4 or 5 days, right? It's kind of just been hovering around those highs. So I still think that risk remains, which is why I lean just to go back zero. I'm not too crazy about necessarily trying to fight the dollar strength or dollar weakness right now. So it leads to a little bit more of a conviction signals on the near term. Make sense? Yeah, the other dollars are weak. Yep, we're seeing some of that. It makes very much sense, says Eileen. Yep, we'll take a look at those as well. Okay, good questions. So moving right along, that was DXY. We'll mark that as number 3 on the docket for today. Dollar CAD. Here's dollar CAD looks like. Well, that's Aussie CAD. And here's what it looked like last night. Okay, so levels remain unchanged. Let me start off with the daily chart just to give you a broader picture since we haven't talked since last week. Really, for dollar CAD, it's just been about the exhaustion trade from the outside reversal that you made off of a critical support barrier last week. That was 130.80. Absolutely huge, paramount, whatever you want to call it. Every significant comment you can make. You had the lower parallels there. You had a key 618 retracement. You had the 200-day moving average just lower. And in general, it's a huge area of inflection of which that outside reversal really was a perfect area to stage that kind of meaningful pullback. From here, we ran right into the monthly open, failed, and the pullback is still what's in focus right now for the near term, guys. So for us, this exhaustion was apparent yesterday. We talked about this early in the week, if you guys recall, from the update back on the 20th. What we were looking for to start the week was an exhaustion rally towards 135.50 to sell. Excuse me, 134.50 to sell. Now this exhaustion rally came just shy of the monthly open and turned lower. We're now sitting on this level here. Here's what the intraday chart looks like now. Okay, so you opened the week, you plowed through this, you kind of just teetered out ahead of this region and came lower, and you're sitting on the support barrier right now. Still think you look lower, while below that 34, 36, 34.53 level. Downside break, you're looking for the weekly open, you're looking for 133, essentially 132.99 as sort of initial support. Both of these are levels of interest for more stringent support, meaning possible long exposure or a rebound off that level. I'll show you the slope in just a moment, but both of these converge on sort of like some really nice levels near term. So here's what we look like yesterday on the update, and here's what we look like right now. We're just sitting on that region. There was no play in this an overnight trade. I woke up this morning hoping to see a rebound again so I can try to get another short against this region, but it doesn't look like we're going to get that. It looks like yesterday was the only position we were going to get on this. Well, the only position I've had on this week so far. So if we get another stab at the upside, I'm going to try to fade this again. It worked out yesterday. If not, if it just collapses from here, look for the pullback to sell against this high. trying to get into that 133 handle on the downside. You still got about 70 pips to go. And that would be a basic 38.2. Again, if I zoom this out, you got this 50 line in here. Oops. You got that basic 38.2 retracement of that range from last week's low. Decent pivot in price. If you look to the left there. And just beyond that, at the lows, at the next target at 32.57 is where it starts getting serious. Now this is the 50% retracement, major swing lows from previously in November trade. That's the median line for the current operative descending slope. A little bit more of a critical region. And again, both areas of which I start to look for some exhaustion, start to lighten the load on any short exposure you're holding in dollar CAD. If we breach the highs, forget it, finito. You know, you're probably going right back into 35.75 again. So I think the levels are pretty clear here for dollar CAD. Still risks a little bit more of a pullback before we resume the upside. Questions on the loonie? Keep in mind, as far as the loonie is concerned, you do have CPI data for the month of November on tap tomorrow. You know, these monthly reads for Canada CPI don't tend to be anything major. We are expecting a slight contraction. Year on year, though, expected to be slightly softer at 1.4%. Could fuel some CAD weakness. So, again, just something to be mindful of heading into tomorrow. If you do get a weaker than expected print here, you might get a little bit of an unexpected pop. Depending on where price is, you know, we're still looking for that drawdown towards the 33 handle. But you're also looking for maybe a short if it only gets to 33.75 and shows other signs. 33.75, Eileen, give me some clarification on that. That's basically the support goes into 33.75, 33.67, this zone here. I know we've been spiking below it, but you're basically sitting at support right now. I'd be interested in fading a rally towards this region, or if this finally breaks, I still would need to see the zoom and retest to try to get a stop against this high. Does that make sense? Again, we're talking real near-term price, just how to execute this. So it would be either a rebound here into the US Open and then exhaustion, try to get a stop against that high. If we get higher, again, major key resistance, or if you see a downside break here, I would need to see some sort of zoom and retest to try to play the drawdown towards 33, stop against the high at 33.90. So two ways to play it. The long side of the trade, I'm just not interested here. Just not interested. Even if you get a long trigger, just because of where the dollar index is trading, just because of the broader theme that we're seeing of broad dollar weakness across the board heading into the US Open. Where is the zoom and retest to? So the zoom and retest would need to be former support. So these lows. So let me bring this to like a 30-minute chart. Right? So just draw your peg. Boom. Okay, so that's obviously not the 1989 high. So you would look for a drawdown, a break here, and a pullback to find resistance at this low. 33.60 and 33.88 is going to be your stretch, basically. It's the max you'll take a stop, keeping in mind that the quarterly daily ATR for dollar CAD is about 22 pips. That's pretty tight. Yeah, it's going to be a tight one to get the zoom and retest on it. So even on a zoom and retest, you'd want to see that spike through a little bit into this zone so you can get at least a 22 pip stop or a 25 pip stop against that high. It's going to be tight. Ideal scenario is to get a pop higher first. Try to fade that against the weekly high. But that's sort of the game plan if you do see that downside break. Eileen, keep in mind where you are in price. We're mid-week range, literally. If I just take a 50% retracement of the weekly range to put things in perspective, we're basically straddling the 50 line right now. All right, so you're midweek and you're right in the middle of the weekly range. Exactly. Eileen gets it from here. So we need to be a little bit more cautious here, but the game plan would be on a downside break to chase that move near 33. Questions on dollar CAD? That was number 4. Okay, Euro Pound. I just wanted to highlight, very interesting setup. It's something that we've been talking about over the last couple of weeks, but we haven't really followed because it's been a lackluster trade for like basically over 2 weeks now. Basically 83.45, a support barrier that we had highlighted, a basic 38.2 retracement from the advance, a little bit further back, the lows that we made back in September. It's backed up by the 200-day moving average and some slope just below. So it looks like you're seeing some rounding bottoming process here. You're putting in some divergence on the daily chart, and the risk was for a pop higher. We've been looking at this for a while. Here's a slope I added last night. Again, I don't want to stress it because it's too short term and we haven't gotten much rebound besides that one. But here's what Euro Pound looks like right now. Okay, and this is also predicated by the fact if we do see continued pound weakness, it would probably, again, would bode well for this trade to get a little bit more of an upside pop. So on the daily chart, again, highlighting that key region, near-term resistance at the monthly open. And by the way, guys, these charts are dynamic on our website, so if you make the page big at home, kind of zoom in, you'll get a much clearer picture of the levels. So it's kind of determined by, I guess, the size of the monitor you're using, but in any event, keeping in mind that near-term rebound, again, near-term resistance at the monthly open, 85. Key resistance, 86.25, in an area of which you'd expect to see, or would be a great, in my humble opinion, even heading into that region, a great area for exhaustion, re-entry back on the short side. Don't know if we get quite this high, okay? First things first, you're looking at 84.17 to 85. That's sort of the initial level you need to get through to get some more topside pop here on Euro Pound. Here's what it looks like on the intraday chart. Okay, and here's what we looked like last night. So it's still holding pretty well. There was actually an opportunity. Again, I didn't take it. It was in the wee morning hours here, but there was actually an opportunity to try to get a long position on. I would caution you again, Euro Pound, Pound pips, so it's a little bit more expensive as far as your P&L is concerned per pip. Still looks pretty good. At its face, all it's made is a beautiful weekly opening range below near-term resistance, 84.50 into 84.65. You're looking at the monthly open, a basic 50% retracement, and the weekly opening range high, all right here. So if we break this, your initial target is 85.40. Okay, depending on where you are in time, again, that 86.25 level being a more critical area of resistance that we highlighted on that daily chart. Hey Theo, he says, I entered late. Have you done Kiwi? I've been looking for some pullback play on the short side, but it keeps sinking since Monday. No, we haven't, Theo. Welcome aboard, first of all, and we haven't gone over, but it is on the list. So actually, it's on the list next, Theo. You came in just on time. Any questions on Euro Pound? So I'm basically looking to buy pullbacks as nimbly as I can while within this formation. We'll look for support along the median line here if this is in play. Too early to tell, but the confluences and the convergences all come at really nice areas. So I do like, generally speaking, this slope for now. We need to get through 85, 84.50, 84.65 to really get the upside going in Euro Pound. By the way, if we clear 83.50 to the downside, I don't want to touch it, even on the short side. This is such a critical area of support longer term that if it gives out, you're likely to see this thing really spill. I mean, I don't even have anything until the highs here from back in April, okay? And then the 50% retracement of the yearly range that comes in at 80.80. So certainly the risk for this thing just to completely disintegrate below 83 is there. Not my base case scenario. Our base case scenario is that we see the rebound recovery first towards 85, towards 86.24. and then we look to take a little bit more of an stern approach back towards the short side of euro pound. Questions? Going once, going twice. Awesome, perfect timing. Thumbs up, says Theo. Cheers, man. Good to see you in the room. Okay, so let's jump into Kiwi dollar. Here's what the Kiwi looks like. You know, Kiwi, Aussie, they're kind of just like losing steam. It's been hard to try to get on the short side since the collapse started. You know, there's been not much back and forth, and that's where we thrive. We thrive in the back and forth market, right? These directional plays, that's where the swing trades are going to be your guidance, guys. That's where Jamie's going to shine. This, you know, back and forth kind of price action, back and forth, back and fill, that's where we tend to do good. These long, continuous drops can be dangerous because you try to fade it on a rebound, you get stopped out, you try to jump in, chasing the move, and on the rebound, you get stopped out. So I've been really reluctant, not going to lie to you guys, to play the Kiwi or the Aussie. Both of them were highlighted on Sunday's update. I was looking for a near-term rally to get short. I told you that. In fact, on the Aussie Sunday morning or Sunday open gap, I was actually long for a rally back into the figure. We did cover 50% of it at the figure, got stopped out at break even on the way down again, and here we are kind of just dilly-dallying below support in Kiwi and Aussie. Here's what the Aussie dollar or Kiwi dollar looks like first on the daily chart, and I'm now working with a near-term short bias below 69.60. Excuse me, 69.69. It's 69.70 right here. Okay, this is the low that you made on that swing back in June. You have the 1618 or the 100%, excuse me, extension of the decline off the highs. You have the actual concerted swing lows for July. And right now, this parallel, which has been just a basic parallel of resistance, here's another median line parallel, really nice pivots. Here's another one extended off the low. Boom. Might offer some near-term resistance. Okay, what you're bobbling off of as support right now is the 68.97 target. We highlighted that last week. That's just the high that you made from back in October of last year. So you haven't really gotten too many crazy radical turns off it, but it's definitely something that's offering some near-term support. So my focus right now is on this range, 69.70 into 68.97. A little bit under 100 pips near-term for the Kiwi. If you see a topside pop, look for the recovery back towards 70, 70, 40, 70, 75. Other areas of interest, again, for the short side. But near term, whoop, get rid of that. Near term, certainly immediate resistance is still 69.52 into 69.69. Okay, here's what it looks like on the intraday chart. Now, again, don't want to stress this slope. A little too early to tell whether this is in play or not, but bottom line, levels remain unchanged. Immediate resistance, 69.55, 69.70. If that breaks, you know, I'd expect to see a little bit more of a concerted recovery, maybe towards the monthly open, the upper slope here, to get back on the bearish side. But it's been tough to play. It's been tough to play even on the intraday perspective. I mean, the levels are pretty good, but, you know, what are you going to do? Play this tight range? That's even too tight for me right now. At least for Kiwi. GDP data on tap later tonight for the third quarter is expected also to soften a bit. Quarter-on-quarter figures only a 0.1 softening, and the year-on-year is supposed to stay constant at 3.6%. So keep in mind, 16:45, just after the U.S. close here in New York, those figures should be hitting for New Zealand. Again, could prompt some further weakness if we do miss those expectations. Here's what the historical GDP looks like. 3.6 is actually on the upswing here. So see if that trend holds for GDP. Yeah, we're kind of mid-range for where we've been. Okay, Theo, questions on Kiwi? Let me look at this in the 30-minute, actually. I do want to just see something real quick. Trying to see if you have any upslope here where you can look for resistance on this rebound to get this level. Let me just check again, a real near-term extension off this high. Ooh, look where the 100 comes in. Right at 69.55, the bottom of that range. So 69.55, 69.70, still any way you slice it, if this is just a near-term bounce recovery within the downside trend, still would be an area of resistance you'd look for on the upside. And again, just like Eileen noted earlier, you're sitting right there mid-range for the week. So slim pickings, but such is the type of setups you get during this time of year. Okay, let's move on. That was Kiwi Dollar number 6. Nope, thanks, you covered everything, says Theo. You're more than welcome, Theo. Kiwi Cad, I just want to touch base on because if let me take a step back. If Dollar Cad gives us that final pop or moves lower, larger story, we get Cad strength. Kiwi Cad might be one that also may be a good one to fade or to continue to see some downside movements on as well. Let me bring your attention real quick to the daily chart, which we've been following very closely. This was a big target down at 92.67, just lower. You have the 200-day moving average, which is basically what we're sitting on, what we rebounded off of yesterday. Here's what Kiwi Cad look like. Earlier in the week, okay, as we were coming into this key region, right? And there's that 200-day moving average just lower. We basically just made that break, tested the 200, came back up, and we're looking at this near-term region as resistance. This would be a zoom and a retest. It's exactly what a zoom and a retest is for those of you who may not be familiar with that terminology. It's basic slope. It's the basic tendency for slope resistance or support to become the opposite. So if it's slope support, becomes resistance. And that's exactly what we're getting here. Break, zoom, retest. If this holds as resistance, then the downside break would open up that move into 91.12, which is the 618 retracement. Just lower you have slope, and that comes in like just around 90.80 or so. So here's what it looks like on the intraday chart. And here's what we looked like earlier in the week. I mean, there's really no change here. Okay, you broke this, you came back, you're checking it as resistance, and as long as you stay below that, the risk remains lower. Now you're seeing mild, weak divergence in the near-term chart here. So the 4-hour, you're seeing those lows, equal lows, the oscillator price action making a lower low. That's giving you some near-term exhaustion signal, telling you that you could see a little bit of a pop higher in near-term price. Broader picture, stays bearish below 94.20 into the yearly open at 94.34. Okay, so if we clear the opening range high for the week, let me just put this level here. Here's your weekly open. If you clear the weekly opening range high, you're at risk for a rally back towards this region first before we move lower. Long story, you want to stay bearish, Kiwi Cad sub the yearly open. Questions on Kiwi Cad? I know it's an interesting pair, guys, but when the technical setup's there, it draws my attention, irrespective of how popular the pair is or not. Okay, so that's a quick look at some of the Kiwi crosses. Let's jump in some of the Aussie crosses, and then I want to take a reflection back, guys, before we wrap things up, and take a look at some larger theme pictures that we're looking at. I just completed my forecasts for daily FX as they pertain to some of the trades of the year. I'm going to cover all that with you today, as well as my forecast for dollar yen for next quarter. I also published the gold forecast for next quarter, and we'll take a look at some of the commodities. But real quick, Aussie dollar, a very similar setup in that it's basically the meltdown is looking at near-term support and kind of validating the break, checking it as resistance now. This one's at the yearly open, okay? 72.82, 72.80. It's a level we've been watching for quite some time. Here's the daily chart real quick. Put things in perspective. The downside stretch didn't make it into 72.12. It's kind of looking like you could see a rebound on some divergence here. Price action making obviously a much lower low. The oscillator making a higher low. Could get a little bit of a rebound. Don't like really playing the Aussie. In fact, the funny thing is I was on the long side here last night. I got stopped out on the move lower. It was only 8 pip stop, literally an 8 pip stop, I think. But I guess I can see what that looked like here. Here's what it looked like. And it was basically, I was just playing the Sydney opening range. Okay, here's your Sydney open, here's your Tokyo open. You kind of made a test of the Sydney opening range low. You failed miserably at the highs. But then as you came into the lows, momentum continued to hold. And I was a little bit early on the trigger here, trying to get cute with it, trying to fade the rally just for a move back towards the range highs. Obviously, played it a little too tight. You got stopped out on that move lower. And here's the rebound, inevitably to the range highs I was looking for. So playing it a little too tight to the chest can hurt, obviously, but you want to be nimble. I'd rather be stopped out than get stuck on a position in these trading conditions. So look for this rebound. I still think you can travel a little bit higher. The broader picture still looks bearish. The broader picture still looks bearish. Here's what I was looking at. I was looking for a rally towards 72.80. You're basically getting that now. I want to... What's the word I want to say? I want to drop the bearish invalidation level near term a little bit beyond that low at 73.70, basically to this sliding parallel. Let me see what this looks like here. Yeah, I'd want to drop it to here for now. Okay, if you see a break of the, actually, okay. So just to let me just break this down for you real quick. I know there's a lot of lines here, guys. This is actually just a sliding parallel. Okay, this is not an actual percentage of any meaning. It's just a 30% of the range. I just wanted to highlight that peak there. This slope you see here is the 50 line. A little bit more meaningful. Okay, and that converges on those swing lows. Right, I mean, it's almost picture perfect right now in time, but basically into the U.S. Open here for tomorrow. So this is where I want to kind of set the initial bearish invalidation. You're at resistance right now. If you see a pop through 73.11, I think the recovery gets to the median line. So you probably see a little bit more upside slope. So we'll look for failure, focus below this region. Not only is it that swing low from last month, which is going to be significant on a monthly low close basis, but it's also that 50 line and the initial weekly opening range high. Very objective range at 73.11. On a downside break, you're still looking for 72.12. You're still looking for 71.44 as targets. No, Theo, we're going to go over those next. Questions on Aussie dollar. It was number 8. Quick reminder also, Jamie is up at 12 Eastern, guys, for the midweek strategy webinar. As far as the webinar calendar for next week, we will still also have a midweek strategy webinar next week as well on Wednesday, same time. And the intraday strategy webinars in the mornings will kick back on January 4th, I want to say. No, January 3rd, right on that first Tuesday. So quick notes on the schedule there. Okay, let's jump into Aussie Yen. I do want to just talk really quick about where Aussie Yen is because we do get continued Aussie weakness and the Yen story materializes. I think Aussie Yen is going to be something real sexy. Here's what Aussie Yen looks like on the daily chart. This was one of my trade opportunities for 2017 for Daily FX. You'll see it published on that website sometime in early January. This is the chart that's going to be on there. 87.55 was critical, and the response we got to it was even better. That is the 2016 open. That's the 50% retracement of the entire 2014 decline, and it's the median line. Now, if this slope doesn't look too satisfying on that support, take a parallel off the low, and it literally caught that spike low on election day. So this thing is, the levels are absurd. And in fact, the previous year, we were trading here in December. I had talked to you guys about this earlier. Our target, key support, was 72.12 or 72.15 into 74.22 is a yearly forecast. So you got to give a range. And this thing, the low registered right in that region, literally right in that region, and then made a full turnaround to cover the entire losses for the year. So look, I think this breakout here was pretty substantial. I think on a pullback, you look for support. If we do get a broader support, remember, this is a weekly chart here, guys, but heading into 2017, if you do get the broader pullback, Aussie weakness, Yen strength, these are levels of which I'd start to look for some exhaustion based on where we are in time. Broader story heading into the deeper part of 2017, you're looking for these targets up here to possibly be a nice area where you'd start to look back on the short side for Aussie Yen. But certainly the break that we've made, the divergence that you saw in momentum as you made those lows, the turn and burn at major structural pivots. Okay, this is just a parallel off the high. Look where the break, really shoot to the upside, looking for a pullback. Initial support at that 50 line. Okay, right now that comes in right around 83.75 or so. And a breach of the highs, obviously the top side targets are pretty well defined. Aussie Yen on the weekly, right? Some perspective here. Momentum at 70, price at resistance, risk for a pullback. You want to buy that pullback some part in the early part of 2017. Looking at this at the daily chart, here's what it looks like on the daily. Aussie Yen, Aussie Yen. Okay, here's what the daily chart looks like. So again, your monthly, zoom in, daily, really nice tight slope off the lows. You had a parallel there that caught the high. Again, that key resistance range, the yearly open, nice reversal off it. Downside support is at the monthly open at 84.47 right now. The median line, a downside break there. You risk a little bit more of a drop towards the lower parallels. Now, this slope I don't want to stress too much right now. This is a near-term slope within the daily chart here, but again, highlights some support targets down into 82.57 as initial support. Key region if we do break lower below the median line. Here's what it looks like on the 30-minute or the intraday. Okay, here's your 4-hour chart. Here's what Aussie Yen looked like earlier in the week. And again, we highlighted this, previously on the 15th as we came into that key region of resistance. There's a reaction off key resistance, pulled back through that first target at 85.54, came back, checked it as resistance last night, and here we are trying to move towards that 84.40 target, okay? This is, again, the monthly open, slope support, and comes just pips below the weekly opening range low. So that's the level you need to get through to validate a little bit more of a drawdown here in Aussie Yen. Now it's an Aussie cross, guys, so You know, the weekly opening range is very, very clear cut. I mean, zoom this in a little bit more. Here's the hourly. You know, the weekly opening range is pretty clear cut here. Here's your weekly opening range high. Look for a break of this range. Short side favored while below that median line. Well, essentially short side favored while above the weekly opening range highs. Let's call it that. Aussie Yen on the 30-minute. Would you call that a zoom and retest on the Aussie Yen 30 minutes? On this move here? So on this move here, depends on the time frame that you're looking at. Let me take this back. Yes, this would be as break, zoom, and retest. But what I'm trying to tell you is on this play here, you've already made that move. So on this move here, if you're not already short, another rally into this region wouldn't be another zoom and retest. It would be another check of resistance, that's all. The initial entry would have been here, if not here, as you failed against that high in another entry. Really, this one probably would have been the better one. I wouldn't have necessarily done anything on that pullback. And you'd be short already. Do I have another zoom and retest on this one? No. It's just the original break, retest, and move off. If you move into the 30-minute, like I said, break of support, zoom, retest. Yeah, you'd still be holding shorts against this high. You'd still be holding shorts against this high. Absolutely. But you're well more than a quarter ATR out already, Eileen, so you'd be already out of those trades as far as the scalp is concerned. Let me bring this in here. Quarter of the daily ATR here is yielding somewhere in the range of 25 pips. Yeah, absolutely. So if you look at this on a near-term chart for the 5-minute, this would be the break of support. Okay, the initial zoom and retest. Let me take a step back here. I think there's a misconception, Eileen, that you have on the zoom and the retest. We're gonna run a little bit over on time here, guys. Hope you don't mind. I'll get through all the pairs, I promise. When we're looking for the zoom and retest, it's imminent. It's imminent. So in fact, the real zoom and retest for this trade. Sorry, I'm moving everything all around here. The real zoom and retest for this trade was right around here, actually. Okay, on the break here on the 18th. Break, this is the zoom and retest. So that would be break, zoom, and retest. If your target is right in between, which ours was right around 80.54, you've been pivoting around it, I don't really want to rely on that as much, right? This is what a zoom and retest is. It's like the imminent test and rebound. A test that comes back a couple of days later or something like that, yeah, it's a zoom and retest in price action, but that's just a break of support, check as resistance. A zoom and retest is really the operative play that you want to do on an intraday type of move against slope, against resistance, trendline support, or resistance. Does that make sense? In fact, it's probably prudent for us to move this to here now. Be a little bit more precise with what price is doing right now. Eileen says better sense, makes sense. Yes, thanks. Yeah, you're more than welcome. You're more than welcome. Right now, you're just checking resistance. But the zoom and retest would have been this move here. We'll see if we can't find some more examples before we wrap things up. Any questions on Aussie Yen? Long story short, looks lower. Looks like a really nice reaction off that 87.64 level. Risk is for a draw lower. One other thing I do want to add on here real quick just to show you some reference. If this is the high, which you have no type of conviction that it is yet, look where that 100 comes in, or that 100% extension. Pretty clean, right? 82.88. Lower parallel. Clean lines here on Aussie Yen. That was number 9. Okay, a touch base real quick on the pound yen, since we're in the yen crosses, and the dollar yen, and then we'll do crude and gold. Here's what pound yen looks like. I'll start off again with the weekly charts here. I didn't highlight this anywhere on daily effects or for the forecast, but it was certainly something that was on the menu for me, and I thought I'd bring it up. Here's the long-term prospects looks like for pound yen. This is a weekly chart. There's a couple of different interpretations on where we are on this trade, but I wanted to highlight the critical nature of the level that we just came off of, namely the 52-week moving average. A simple moving average here in price converges on basic slope resistance off the lows, converges on slope of the ascending slope. This is just basic trendline support off the lows for December and January, extrapolated off the highs from what is that, April of last year, excuse me, and that slope converges all in this region. Weekly chart on the momentum also failing here right around 60. Okay, so point being, heading into the start of the year, you're at risk for a little bit of a kickback here in pound yen. Remember, you've had a phenomenal rally off the low. You never want to downplay these, but you're coming into structural resistance. So the risk for some weakness, that weakness, in my humble opinion, heading deep into the first quarter, second quarter of 2017, should be viewed as an opportunity for a topside pop through 152, which is a critical area of resistance for pound yen. Larger picture, right? Weekly chart. Keeping in mind where we are in price, keeping in mind we had some very clean divergence into the lows, followed by a trigger break. You're still looking to stay constructive broadly above 33.44, near-term support at the median line and those former highs, looking to get through resistance at 52. Daily chart, pound yen. Critical area of resistance, again, that slope. Oh, this is the 4-hour, excuse me. Basic slope resistance, parallel, caught, caught, caught. Upper parallel for the ascending formation. Divergence, price action making higher highs, lower highs, lower highs. Weak divergence because it's above 70, but it's there nonetheless. Okay, and the risk is, again, for a little bit of a drawdown here, ultimately, we'd be looking to buy the dip in pound yen. But I don't really want to take any long exposure, guys, unless we get through this resistance. This is another one you'd need to see a zoom and retest to get back on the long side. Other than that, you're buying at 5-month highs into the close of the year on waning momentum. Not really my typical play for wanting to favor the long side near term. Questions on pound yen daily. Here's what it looks like on the intraday. Again, a much wider range scalp. Keep that in mind. We're looking for waning momentum. We're looking for downside moves. Initial targets, again, going to be at the monthly open there at 143. Key support and a target on the downside if we do finally get this range break to the downside. Near term, 138.51 into 138.99. You got a big range here, but again, keep in mind the wide ATR you're working with on pound yen. Questions on pound yen. Going once, going twice. That is number 10. Dollar yen. Here's the mother of them all. So dollar yen looks like this. Look, again, I think, in terms of dollar yen, I don't necessarily want to mess with it. This is the near-term slope I'll show you in a moment. Here's the daily, and the reason I don't is because, that stretch into 2018, I still think could be on the cards on some kind of radical action into the end of the year. Momentum is still an overbought, so this condition, as long as we stay here, the trade has push. I don't want to fight it. It's the break below 70 that would inevitably, in my mind, be okay. Maybe we get finally get a setback in dollar yen. Now, this, although we're looking for yen exhaustion on the crosses, this doesn't necessarily need to translate into dollar yen, and that's one thing I want to note. Yeah, there's divergence into the highs, but it's above 70. Momentum is still above 70. That's a mixed picture. Price action, yeah, there's a couple of levels here that Jamie will highlight for you that we're at resistance, but near term, as far as slope is concerned, I'm still a little concerned, right? if you take it off that low, you do have some resistance here. Long story short, you're sitting pretty much in a very lackluster area for dollar yen. I'm still looking for possible exhaustion lower. Here's a slope that I was playing with the other day. It looks like it's continued to hold. Looks like yesterday we tried to probe through it and the weekly open failed, but it held. Long story short, too early to tell. You're sitting mid-weekly range again. Here's your weekly open. You're sitting mid-range. And put a gun to my head, I want to sell rallies sub 118. Is it a conviction turnaround for me? No, not yet. Not by any means. So we're just broadly working with this slope for now and see if we can't get any play. If you take an extension, interestingly enough, off the highs, and again, you don't have any means of knowing that this is a near-term sort of corrective high, but look where that 100% extension comes in. I did this last night, and that kind of still why I'm looking lower. 116.12, 116.08, nice pivot in price, former highs, a 100% extension, and that converges on the median line, but not till basically, what, later in the week here, tomorrow. Basic slope resistance off the highs gives us bearish invalidation right there. Sort of what I'm working with here with dollar yen. Again, as a disclaimer, guys, I haven't taken any dollar yen positions whatsoever. I tried to fade the rally pretty hard earlier in the month as we were coming into this initial resistance. It worked out for a while, but Thursday or Wednesday of last week was pretty definitive. And I need to see a little bit more price action to really confirm that we're seeing this turn in price. Risk remains lower. Risk remains lower, though. Questions? Yeah, Conwell says me too. Yeah, I don't think we're the only ones, Conwell. Let's see if we can't get momentum moving lower. As long as this thing is in overbought territory, guys, we're just throwing darts trying to call the high. And I'm not going to do that. So keep that in mind. One other thing I want to bring to your attention is the weekly chart on dollar yen. And this is something that I did highlight in the weekly forecasts, again, which will be published later next year, but you guys get it here. Is this. Here's what the weekly picture looks like for dollar yen. Larger story. And this is why, for me, a rally towards 121, 120.18, it's still welcomed because in the broader scheme of things, so basic, check this out. Basic trendline resistance off the high. Break is the acceleration to the upside, support on the way down. That same slope, a parallel extended off the highs, literally caught both of these highs and converges over the next couple of weeks over the high week close for the year, the yearly open for 2016, and a basic 786 retracement of the decline from last year's high. All of those converge here. So, does this thing rip lower, then move higher? The timing is going to be the issue here. And heading into the end of the year, my worst type of, not our favorite ideal conditions, that's the time where it could happen. You see that market participation start to wane, thin market conditions, boom, see some spikes. You can see that often happen to the end of the year. I don't know if we get it. Long story short, I do think that dollar yen stays constructive above 111.45 on the weekly chart here. And really 121.11, 120.18 is the region to break to get the acceleration, the continuation of the broader uptrend we've been seeing off that 2011 low. Okay, so some perspective here. Good time of year to take that perspective look, guys, on a lot of different trades. So I know we've covered some weekly charts here today, some things to keep in mind heading into next year. Okay. I know we're over on time, but we're almost going through. So last but not least, I do want to jump into the commodities. Any question on the dollar yen, both on the weekly chart, on the daily chart, on the intraday chart? All right. Gold. I do want to highlight gold because heading into next year, I think this is going to be pretty critical. And again, the forecasts for gold, I do have the possibility for a recovery, but you'd need to get through 1210 to clear the way. If you get a downside move, or let me take this step back, a dip, let me take one more step back, 1086 is what you need to know is critical support. If 1086 gives out, I think gold goes sub 1,000 into the 800 region. 890 would be a first sort of initial major key target. Why is 1086 important? Well, very significant in the fact that it's the 50% retracement from the advance off the lows that you made in 1999. Okay, so your 1999 low, a 50% retracement of that entire advance. More importantly, it's the low week close from last year. The low in price registered here on the week of November 30th. The close of that session was 1085. That gives you 1085, 1086 confluence as major lateral support. Just above that, you have this slope, which we've been working with for years now, right? This same slope defined this pivot in price, support, support, resistance, resistance, support, acceleration. Same slope that defined the highs for the year. Okay, same slope defining these pivots, and that comes in just lower. Right now, where we are right now is near-term support. This is why this is bullish invalidation. As it stands, it's sitting at support, and I know everyone here in the room has heard me talk about 1210, 1230 for months. Okay, and that's where we are right now. You have the 1618 extension off the high, you have the 764 retracement off the low, you have the swing lows from 2014, and slope support all converged right here. Heading into the start of the year, I don't want to be excessively bearish gold. You're at support, a break lower, yeah, you could see another 35 drop, no problem. But even that is taking you into a critical support range. So all these people who are just, gold is going, to 800, don't, play your cards too early. You have to get through some major support to get down there. As it stands, you're sitting on that level. We've already gotten a pause and a hold here, and momentum on the daily chart is at 30. So I want to caution all the gold bears, okay? You're at structural support right now, and you could see a rebound early in 2017, okay, with our broader bullish invalidation level for the broader uptrend down at 1086. Any questions on the weekly chart? Here's what it looks like on the daily. Okay, again, highlighting that critical area of support, near-term slope of just this year's slope derived off the highs here. All of these dotted lines are the same slope. Coming right in, that Fibonacci confluence. You're seeing some consolidation here. Momentum stays in oversold condition on the daily chart, which is why for me, I can't validate, Conwall, specifically for you, I can't validate trying to play a rebound just yet. If you get through 30 in momentum and you see a topside break above 1142, which we talked about that, nice little pivot in price here, that might be a topside play for a recovery. But as it stands right now, you're just in consolidation at support. Look for a break of that range near term. A downside break, look for slope support, 1085, 1086 as your key sort of region. It's also 1083 is the 88.6 retracement, guys, but I don't want you to stress that. 1085, 1086, the high week, the low week close, and that longer dated key 50% retracement are what's going to really be critical here on the gold trade. Hairy position, but coming in some meaningful areas of support for gold. Last but not least, here's what crude looks like to close out the session here, guys. I appreciate you sticking it out with me. I just want to highlight here, Conwall, 54.30, okay, into 54.21. You have some meaningful levels there. A nice pivot in price from back here in 2015, but it's also the 764 retracement and this formation. So if I take it back to the weekly chart in crude, give you a little bit of a color of where we are on the broader thing. Here's, 2016 open. You're trading at the fresh yearly highs. This does define a 618 extension of the advance off the lows, 55, just higher. But also I wanted to highlight this slope. Too early to tell. We got the first tag it held. Support kind of held pretty much at the median line. That converges up here. So wouldn't be surprised to see some exhaustion, as it were, heading into the start of 2017. Near 55, near 54. Also note that on these series of higher highs on the close basis, you can see that momentum has failed to make those higher highs, and again does suggest that the near-term topside momentum may be waning into the 54-55 barrier. So I'm cautious about continuing to favor the long side in crude near term. I do think you're making some serious headway, and I think there is more upside to go broadly speaking, but heading into the start of the year, heading into 55, you want to soften that approach on the long side near 54.30, 55 handle. Okay, even just near-term upslope support, it's coming into that region here near term. Here's what the intraday chart looks like for crude. These levels that we were following last week, if you remember. That break above 51.45, 51.65, again, kind of invalidated the short side of the bias. We were looking for a drawdown into 48.90. Would have been a really nice entry in my humble opinion. Didn't quite get it. Obviously, the breakthrough here invalidated things. And again, 54 region, really big as near-term resistance for crude. Last but not least, Nikkei 225. I just want to touch on this real quick because I was looking at this with some interest. Look, the daily chart's pretty clear as far as the level we came off of. Big region, 786, major Fibonacci confluence, retracement off the low, 1618 extension off the high, or excuse me, 786 retracement off the high, a 1618 extension off the low. Long story short, pretty nice reaction. Look for a pullback possibly in the Nikkei here at the median line, topside break. You're looking for 26, which is basically the highs that you made in 2015. So some interesting areas and possibility for some pullback and risk, specifically if we get a downside break in momentum here, could unleash some more of a corrective action in some of these risk assets. So do keep an eye on those levels. Conwall, I will look to see if I can tweet a chart out of nat gas right now. We are way over on time, and I haven't, I don't have anything set up, so I don't want to take the time here necessarily to get all into it. Let me just take a quick look at the daily chart for you. Boom, 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 boom. It's going to be a very similar, I suppose. Okay, I'm going to leave that 50 there because it actually lines up pretty well with some swing lows that we made here in 2015. So I'm just going to leave that there now. Could be a near-term bull flag, in which case you would still need to watch for a break above that 355 level, okay? That's what I would say about this. I'm not really a big fan of trying to interpret this as a bull flag, but it's classic pattern. So watch that. Even if you get a rally into 354, I'd be looking for a possible exhaustion short against that. I don't want to chase these higher from here, and that's basically based on the daily chart. I mean, look where you are both in momentum, both in price. Oops. Look where you are both in trend and basically where you are for the yearly stat. You're kind of already near the highs here. near-term support. That might be a stretch there, but top side break targets, these are the levels you need to respect. I wouldn't even do that more so. I'd do something like this. This is a big zone. And so is this near term. All right. This is a crude chart. I just threw this together for you, Conwell. I hope that offers some help heading into next year. I'll see if I can't do some more work on this. If I come up with anything, I'll tweet it. But watch these levels for now. Again, keeping in mind that essentially the monthly open is the monthly opening range low. So here's your monthly open. You made a high into resistance, failed. Check the monthly open as support. You're sitting mid-range for the month. Look for a break of this with the risk for a little bit more of a downside recovery before we continue higher. Broader picture remains constructive in my humble opinion. All right. Hey, you're more than welcome, Kamal. I appreciate the comments. Thanks for your extra time and good discussions. And from scratch chart with Nat Gas. Even if I can't trade it, thanks. Enjoy your Christmas break. Hey, guys, I want to take a moment and just thank everyone in the room for making, again, our heading into our third year of operation here on SB Trade Desk. It's been an awesome ride. We look forward to much bigger things heading back into 2017. Appreciate all your support and all your participation as always. Guys, I want to wish everyone a happy, healthy, blessed holiday season. Again, intraday webinars will continue on the 3rd of January. Don't forget, Jamie's up today at 12 a.m. or 12 here in New York. And he'll also be back on Wednesday of next week for another midweek strategy webinar. Updates will be ongoing and uninterrupted for the large part heading into the new year. All right, guys, best of luck trading. Again, wish everyone a happy holiday, and we'll see you on the flip side. Cheers.